Welcome to your monthly market report for October 2024. My name is Kate Rezebeck with Keeping Current Matters, and I'm thrilled to be here with you today to go over everything that's ahead in the housing market forecast for next year. There's a lot of anticipation around what's to come. And what I'm going to do today is break it down with professional visuals to help you explain to your clients what the experts are saying is coming up next year. We always say it's better to show than to tell. And I hope that today is going to give you those resources that you need to have the most impactful conversations right now to be helping your clients understand what's coming in 2025. So we're going to go over several key topics today. And we're going to start with mortgage rates. Then we're going to talk about total home sales, and we're going to go into home prices as well. So three big things that are really on everybody's minds. And, I think as we think about next year, it's important to reflect on where we've been. If you think about 2023 and 2024, we've definitely had some challenging moments in the housing market. You've been faced with rising prices and higher mortgage rates that have certainly put an affordability crunch on your clients, and low inventory. It's been hard for a lot of people to find a home. Plus, add on to that the NAR settlement and all of the industry changes that have reshaped your business and how you operate. And here's the good news. You've survived it all, and you're still here. And, I think what we can look at as we look into 2025 is signs of optimism. And, I think we're going to be able to talk through all of those things today, what's coming, what's ahead for the new year, and how to communicate that best with your clients. So as we dive in, we're going to start with mortgage rates like we've got up here on the screen. But let me tell you this, if you haven't gone back and watched last month's monthly market report for September, I want you to go back and do that at some point, because David did such a great job of breaking down what's happening with mortgage rates. Where are they right now? What's going on? What do we look for to expect what's going forward? How do we put all that together? How does it relate to the Fed's decisions? All those different things are explained in last month's monthly market report. So I want you to take the time and go back and watch that if you haven't, because I think it really sets the stage for where we're headed in 2025. So as we do that, let's dive in. Let's talk about mortgage rates first. And I want to begin with this quote right here from Realtor.com. It says, "We expect the economy to land softly and housing inventory to continue to recover. This should put downward pressure on mortgage rates this fall and winter and will set the stage for a much better season for home buying in 2025. I mean, that's really what we all want to hear, a much better season in 2025. It's certainly what we're looking for. We've seen some easing in mortgage rates already. That's improving affordability. We're seeing inventory rising. We're seeing all of these signs that are setting up a better environment for next year. So let's break down what that means, because I think really at the end of the day, as mortgage rates continue to ease, that's what's on everybody's mind right now. That's really going to set the stage for how 2025 plays out. And it's all going to be dependent on the economic factors coming in. What happens with inflation, unemployment, all of those different things that kind of come into the equation are really, really going to set the stage for next year. And right now, the signs are good. All of these things are moving in the right direction. We're going to be keeping our eyes on them for you. We're going to be communicating this back to you, but really making sure that those are the things that we're watching are going to help tell this story. And I want to take a moment to talk about, the Fed's decision. And we've talked a lot about how that's impacting mortgage rates, what that means. And I think there's a lot of misconceptions out there on how the Fed's actions impact what happens with mortgage rates. So let me show you this quote that I think really helps explain it. This is from Bankrate, and it says, "Fed interest rate cuts in general will bring about lower mortgage rates, which is a definite boost to the housing market, but it won't happen overnight." So like I said a moment ago, a lot of things are going to be dependent on what happens in the economy. Does inflation keep moving? Does inflation keep easing? Does employment keep moving in the right direction? And the Federal Reserve is watching all of these things. And they're making decisions on the federal funds rate based on all of these economic factors coming in. So as all of this comes together, that's where we see mortgage rates respond. A lot of people think the Fed sets mortgage rates, or they think, when the Fed cuts interest rates, that means that mortgage rates are going to come down. It's really about all of those things coming together, what's happening in the economy, what the Federal Reserve does when they take action that reflects what's happening in the broader economy. And that's when we see mortgage rates respond. So really keeping our eyes on this is really what's going to be important. And I think what we'll see next year, what the experts are saying, is this downward trend. We're starting to see it already. Over this next 6, 12, 18 months, the expectation is that mortgage rates should continue to ease. Now, let me show you what those projections look like, because I think that's really where you start to see what everyone's saying. But these are 2025 mortgage rate projections from Fannie Mae, MBA, and Wells Fargo. And when you look at them all together, that column over on the right, you can see a general easing over the next year, maybe into the high fives, mid to high fives. Now, that's not a significant jump from where we are today, but it's certainly every little quarter point matters and helps the buying power for your clients. So being able to communicate what the experts are saying right now sets people up for how to plan in the months ahead. And I think it's really important to remember that this is going to be volatile. This is going to be a bumpy ride. It's not going to be a straight downward trend. Like we said, as the economic data comes in that informs each of these things, the factors that we look for and that we watch in the markets, all of that is going to be a little bit of an up and down. We've seen mortgage rates go as low as about 6.1% over the past few weeks. At the time that we're recording this in early October, we're looking at more like 6.25%. So we've seen a general easing trend, but it's going to be a little bit of a volatile, bumpy road, as we say. And, one of the most important things to remember when you're talking about forecasts for mortgage rates is that they are the hardest thing to project in the housing market. There's so many different factors that go into them. And so once you start to project a number, you are inevitably going to be wrong. So taking the best possible data that we have right now, the best projections out there, everything that we're looking at, the historical signs that we can see, mortgage rates are expected to ease slightly next year, over the next 6, 12, 18 months. And that's a great sign for your buyers. That's the sign you want to be speaking about with your clients. And if you look at it a little different way, this is mortgage rates and projections. You can see the dotted lines are the projections over the next year from the same 3 forecasters. So certainly coming down off that peak from a year ago, definitely not as low as what we saw in 2020, 2021, when they hit those historic lows. That's not where we're headed, but we're certainly moving in the right direction. And that's definitely one of those signs of optimism we certainly want to share with our clients. And, I want to pause here for a second, because as we start to talk about mortgage rates, it brings me back to thinking about Steve Harney, the founder of our company. And for those of you who have followed along with us, and you remember Steve. We lost Steve very suddenly at the beginning of this year. And just prior to his passing, he was talking so much about how he just knew mortgage rates were going to get into the fives this year. He said it's not going to be 5%, could be 5.99%. But that's what we're looking at. And he was so adamant and so passionate about getting that information out there. And I just know in my heart, as we record this right now, that Steve is looking down at us and he is smiling and he is saying, I knew it. I knew we were going to get there, because gosh, we are so close right now. And I think if Steve were here right now, he would say, we got some work to do. We got to get out there. We got to share this message. We got to help every potential buyer, seller know what this means, as mortgage rates come down, how it improves affordability, how they have opportunities, taking advantage of those opportunities and helping our clients really understand their buying power at this moment. So, as we go into next year, being able to communicate what this means, mission critical to helping people buy and sell their homes. Because really and truly, what this means is it's going to take a lot of people off the sidelines. This quote from Wells Fargo says, lower financing costs will likely boost demand by pulling affordability crunch buyers off the sidelines. And that's a big deal, because there's been a lot of people that have kind of waiting, maybe even still waiting, because they don't truly understand the difference that this could make even right now. Our team has done some research lately. You're going to see this in the coming months, that how much more buying power that your clients have right now, in a $500,000 loan compared to this time last year. The monthly mortgage payment on that loan has gone down about $500. Now, that's a massive change. You're going to see us talking a lot about this in the months ahead and what increased buying power means for your clients. But being able to get that message out there, mission critical, because there's going to be a mindset shift as mortgage rates continue to ease. Like we said, it's going to be volatile. It's going to be some ups and downs, but people are going to start thinking about their plans differently. They probably already are. In fact, if you look at this survey that we have from Bankrate, it says more than half of homeowners would be motivated to buy with rates under 6%. This is a recent survey that they put out that basically says about 52% of buyers, of homeowners, would be willing to buy a home if rates come down below 6%. That mindset shift is going to be a game changer. People are starting to think about this already. And on the sell side, over 1/3 of homeowners would be motivated to move with rates under 6%. So what people are saying is, as rates come down, we're going to do something. Not everybody, it isn't going to be a massive influx, but we're certainly going to see more people in the market. We're going to see more buyers start to jump back in. We're going to see more sellers feel a little bit less rate locked. And what that's going to do is it's going to unlock inventory. And when we unlock inventory, what does that mean? It means more transactions. And so when we think about 2025, I want to walk you through what the projections are for total home sales, because more buyers, more demand, more inventory, all of these different things mean more transactions for your business and more people that you can help buy and sell a home. So let's take a look at what the experts are saying. This is total home sales, and they are forecast to rise next year. So the current pace right now, if you look over on the right, is that we will sell about 4.7 million homes in 2024. Now, this is a combination of existing homes and new construction. And so 4.7 million, certainly not anything compared to pre-pandemic as you look back to 2019, or certainly not even close to 2020 and 2021 when just everybody was buying and selling a home. You can see that drop off that's happened over the past couple of years. We've seen affordability crunch with higher borrowing costs, higher prices. But as we look into next year, experts are projecting about 5.4 million homes to sell in this country. So certainly a tick up, definitely something that will help invigorate the business, no doubt. And I do believe that when we, look back in time, a few years from now, when we look back at 2024, that'll probably be the bottom on transaction volume. And it should tick up from here. We're seeing more homes built. We're seeing, financing costs come down. We're seeing prices moderate, all of these things that should drive more transactions in the market. And that's good news for your clients and your business as well. If you want to break it down to see what the experts are actually saying, it's anywhere from about 5.2 to 5.7 million homes are the current projections for next year. And whether it's 5.2, it's 5.7, or it's somewhere in between, the question I have for you is how many of those transactions are going to be yours? What are you going to do right now in your business to have the right conversations with your clients, to share the visuals, to educate your sphere on what's happening, what to expect? The more you do that now, the more you see results next year, whether people are ready to make that move now or whether they're waiting till spring. Kind of setting the stage for that right now is mission critical. Because if you have, a sale in motion at this point, or a buyer in motion at this point, chances are that transaction is going to close after the first of the year. And that's going to start to drive these numbers as we go into 2025. So there are things that you absolutely have to do now to be able to drive your business forward, to be able to help more people, and having those conversations, mission critical. And I think this quote from Business Insider is really important in that context, because it says, waiting until next spring or summer should also give you more inventory to choose from, but you'll likely be up against greater competition since it's the peak buying season. So we know transactions are expected to increase next year. But when we have a lot of people sitting on the sidelines waiting, will mortgage rates come down a little more? Will I get a better deal? What they're going to be doing, just kind of delaying the inevitable of being back in that more competitive environment. That's kind of setting the stage for where next spring may be headed, is if more people are waiting and they're looking for that ideal rate environment, we're going to see more competition in the market. Definitely will drive more sales, but we're going to see, potentially more challenging situations for buyers. And so what I want to talk about is for, when that increase is happening, that increase in demand, what does that mean for home prices? So if we think about home prices, more buyers in the market, more demand in the market, we still have really tight inventory. Yes, it's growing, but we certainly don't have a surplus. Inventory is still low nationally. So what that means is upward pressure on home prices. So if we look at the forecast for next year, 2025 home price forecast, we can see from 10 different entities that it's roughly 3 to 4% home price appreciation that most experts are saying. If you've averaged them all together, about 2.5% appreciation nationally. But we know that inventory is still lower than the demand that we have. We can anticipate demand increasing next year, and that is going to put upward pressure on home prices. So, what I also see when I look at this is more moderate appreciation, not the exponential rise that we had a couple of years ago. I would call this healthier and more sustainable, because if you look back in time, we really did have unsustainable home price growth for quite some time, priced a lot of people out of the market. And what we see for next year, as inventory is rising, as mortgage rates are coming down, home prices start to moderate as we look into 2025 and beyond. And so this is the national look, but let me tell you, it's more important than ever to also be the local expert, because we're going to see different levels of appreciation throughout the country, some much more accelerated than others, some more flat. And as we look at this quote from Lance Lambert, he says, even if the average national home price forecast for 2025 is correct, it's possible that some regional housing markets could see mild home price declines, while some markets could still see elevated appreciation. That has been, after all, the case this year. It's really all about supply and demand in local markets. We definitely see higher levels of supply in some regions of the country than others, still very tight in other places. So really being that local expert, we always encourage KCM members to understand the national perspective, which your clients are seeing and hearing in the media and their social feeds. Anytime they're reading or watching TV and hearing this message, it's most likely a national message. But when you layer in your KCM local data with what's happening nationally, then you can be the expert, the go-to for your market. And that really helps your clients make the best possible decisions. Because as people are waiting, we're going to see upward pressure on home prices next year, more competition, all of those things are going to come into play. And we want to be able to inform everyone on what to know now and what to expect in the future. So if we had to sum it up, I think Selma Hepp from CoreLogic says it really well. She says, currently economic projections for 2025 are also positive, which points to a positive outlook for the housing market. We talked about a lot of the optimism that we see, the better conditions for 2025. I think there's a lot of opportunity to be had, but it's about how you start to communicate this message now with the professional visuals, with explaining this to your clients, with helping them decide, is it now, is it later, what are my needs? All of those different things, really, really important to be talking about today. And I want to leave you with one final thought as we wrap, because I think this is a really important one. Always remember that no one can give perfect advice, but you can give expert advice. We've given you all the data and the resources and the visuals that you need right now to be the expert. And, it's that expert advice that people are leaning on, that people are craving, that they need right now to make the best possible decisions. Because a lot of people are confused about what's actually happening in the housing market. What does the data say? What can they expect for next year? How do they plan for what's ahead? Well, think about it this way. You need to be the expert for your clients, much like you would need a doctor to be the expert on medical advice or a lawyer on your legal issues. Let's take that example. If you go to your lawyer because you have a legal issue to work through, you're going to that person because you need them to assess the facts, to look at the evidence, to use their expertise and their experience to help lay out different scenarios that you can choose from. They can't tell you exactly how a case is going to turn out, but they absolutely can guide you through the process with the facts, the data, the insights, their experience, everything you need to make the best possible decision. That's the kind of expert that your clients need right now in the housing market. They need you to guide them through this. So don't be scared about talking about what's ahead, talking about your relevant market opinion based upon facts, because you can't give perfect advice. No one can do that, but you absolutely can and should give expert advice. And that's going to be the game changer as you go into the rest of this fall and into next year. Now, as always, we have some great professional visuals to help you with that. You can find these social graphics and many other resources in the KCM member area. I encourage you to go poke around, see what we've got on what's ahead for next year and much, much more so you can be the expert for your clients. It was a pleasure to be here with you. I wish you the best in the weeks ahead. We will be back next month for your November monthly market.